Ladies and gentlemen, welcome back to the channel. The S&P 500 currently up about 0.13%. A little bit of a back and forth rocky kind of day here in the equity markets. You have the bonds going up, you have the dollar going down, which is bullish, but you're just coming off of bad earnings from Microsoft and Google. Today in after hours, you have earnings from Facebook, Google, Facebook, Snapchat. They all are at this point looking like the advertiser is slowing down in a big way, and that is a bad thing because advertising is such a large component of the stock market these days that is not going to be positive. And we're going to get that final reaffirmation, that clarity of if it's affecting all advertiser companies, and that will not be so positive, but we'll see. Who knows? Facebook might pull the rabbit out the hat, so to say. Now, nonetheless, let's talk about exactly what's going on today, what earnings we have here in after hours, what earnings we have for tomorrow, and the economic data that will be coming out over the next 2 days, because you got some big data points that will also help to move the markets. And the S&P 500 currently is at a very, very important level. We actually broke out above the 50-day moving average. And like I said in the previous video, if you can get that upside momentum, if Apple has good earnings and Amazon has good earnings and the bond market as well as the dollar continue to play along, you could see a pretty big rally from here, guys. So let's get straight into it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in that comment section, baby. Let's talk about it. So first things first, I'm sure you guys already know Google, Microsoft had bad earnings. There's no way to sugarcoat it. They were very bad, and that was the negative factor weighing on the markets, especially last night in pre-markets. The futures we're down like 2% on the NASDAQ. You open the day on the markets and everything basically started to rip. Now, with the bond yields, that's a big reason why bond yields are actually going down here today. TLT is down about, well, the bond yields are down. The price of TLT is up 1.09%. That is because partly when you get bad company earnings like this and you're seeing CEOs and, board members talking about an economic slowdown, recessions, and how bad things are getting, well, that's saying to the markets the Fed might not have to raise rates as much. Maybe we should go out and buy the bonds at these levels, yielding us 4.5% almost on a 20-year treasury, right? So there's a little bit of the logic behind that. And same thing for the dollar. The markets are looking at that like maybe the Fed won't have to raise rates as much. They won't have to take as many dollars out of circulation. So, hey, we're going to go buy other currencies. We're going to sell the dollar a little bit. And that is why the dollar is also down about 1%. But the most important bond as of 2022 has been the 2-year treasury, because when the Fed raises rates, it directly affects the 2-year treasury more than other bonds, because typically the Fed doesn't just jack up rates this much and then cut them, right? So this is really saying, hey, we think the Fed's going to raise rates to this amount. It's more so giving you a look at what that terminal rate looks like. And currently, the 2-year treasury has been going down over the past couple of days. It hit a peak of 4.61%. Now it's at 4.42%. So today you're even down 4 basis points. So that's a positive thing. And this is something that has really helped out the markets over the last couple of days of rally. But in the grand scope of things, guys, back in the beginning of this year, back in January, the yield was under 1%, usually in between 0.80% to about that 1% threshold. So you've went up 4x in these bond yields, in the 2-year bond yields over the course of 2022. And what that is telling me is that if we're getting this kind of reaction off of a 0.2% move to the downside in these yields, well, potentially when we actually do get that Fed pivot, a lot of money's going to come in, a lot of trading algorithms are going to start buying stocks, and you could see a very rapid appreciation to the stock market, even considering the valuations have come down a lot, guys. There's very, very, very few companies, far and few between, that are actually something that you could look at as like overvalued, right? They're not, like, nothing is overvalued right now. It's quite pathetic. You can't even find one company that's like, wow, that is a really bad deal. Whereas in 2021, that those companies were everywhere. Companies that should never be trading for what they were worth. Not even a short squeeze candidate, just people buying anything because the bond yields were so low and you could not get a return in the bond market whatsoever. So at this point, the risk to reward, that's what it's about. The risk to reward looks a lot more enticing for the stock market as of right now, or even for the bond market. That's why I think you could see a big downtick in yields if people do start to buy those bonds at the 4% coupon. If we do get some kind of indication the Fed will slow down raising rates, I think it could be pretty explosive for the markets overall. Now, nonetheless, let's talk about economic data that we do have heading into tomorrow, because you do have at 8:30 in the morning durable goods orders month over month for September, and then at 8:30 in the morning as well, you have the GDP growth rate for Q3. So that will be important. As you guys do know, we've had 2 consecutive quarters of declining GDP growth so far in 2022, and this third quarter, people are expecting the growth is likely to be positive. We're expecting a 2.4% GDP increase. I don't think that's going to happen. If it does happen, well, that's going to say to the markets, if we have a really good GDP report, that's going to say, hey, maybe the Fed does need to raise rates more. If it's really negative, that's going to be negative for a recession, and basically everyone's going to be saying we are now in a recession. We've had 3 declining quarters of GDP growth, all of them over 1% apiece, so we're in a recession. So that wouldn't necessarily be positive, but it would say the Fed probably don't have to raise rates as much, and that could be the positive thing out of a bad GDP report coming tomorrow. Now, you have initial jobless claims at 8:30 in the morning as well. Continuing jobless claims at 8:30. GDP sales, real consumer spending, core PCE prices, year over year and month over month. That's going to be the most important data point, more than likely coming out tomorrow at 8:30 in the morning. So you're going to get bombarded pre-market by all of this data, and depending on what's good, what's bad, that's probably going to give us that initial reaction, because here in after hours we do have some earnings, but I don't think they're going to be huge market movers unless we do get some kind of black swan event. Just things are really bad, or something along those lines, which I don't think Facebook earnings are going to be that big black swan for the markets, because after all, we've heard from Snapchat, we've heard from Google, and we know the situation is not good at all. Now, on Friday, you also have personal income month over month for September, personal spending month over month for September as well, coming out at 8:30 in the morning. And again, core PCE price index month over month for September coming out at 8:30 in the morning on Friday as well. Pending home sales month over month and year over year, and the Michigan Consumer Sentiment Survey that comes out at 10 o'clock in the morning on Friday. So Friday's going to be a jam-packed day full of data points as well. But I think come Friday, you're going to be already digesting Apple earnings. That's going to be the main story. And this actually just came in. The United States 5-year no auction reported at 4.19%, previously at 4.22%. So we'll see if that does give us a candle to the upside and what that does for the markets. But as of right now, it looks like the markets are actually going down off of that information, which is not such a bullish thing. Now, we're not quite to the end of trading here today, but you can see we broke above the 50-day moving average, and now we're back under that. That moving average is sitting at $384.42. If we can actually get a close above that, if we can move above that in after hours, that's going to be very positive, but it does look like we got rejected from that level as of right now. So do keep that in mind, guys, that you did get rejected. But if we can break above it and get some solid momentum, then you're probably headed to that 200-day moving average around 408.45. So there is that information as far as the earnings here in after hours. You are looking at Facebook or Meta, whatever you want to call them, Ford, Teladoc, ServiceNow, Anai, Analy, O'Reilly Auto Parts, and some smaller companies. These are going to be the bigger ones. Facebook, Ford, Teladoc, ServiceNow. Those are going to be the ones people really look at. Obviously, Facebook is going to be the important one, the one that could move the markets, could move the futures, so on and so forth. And just depending on what they say, it could be really good or really bad for the markets. Now, as far as the Ortex data, the daily live short interest, let's go ahead and pull this up. You can see a cost to borrow max of 20.14%, cost to borrow minimum of 7%, and a cost to borrow average of 19.19%. The live short interest of free float sitting at 19.98%. This is up almost 2% today alone, and up about 690,000 shares. It does look like the live short interest just the other day was at 95 million shares. Now it's at 103 million shares. So that is pretty interesting right there. And we just got the release date for the short interest, and it's at 20.25%. It's up 5.5% from the last report that we did get. So much higher than what we have seen in quite a long time. You got to go back to June to get levels of short interest that are officially as high as they are right now. Also, let's go ahead and take a look at the option activity for the day, and it's looking like a positive order value of 7%. Obviously not the greatest thing. AMC stock is down about 1% now at the time of recording this video, and you are seeing 5 orders for about $345,000. But really, everything is up in the air when you are being strangled by the bond market and bad earnings that are starting to come out. So guys, that is pretty much going to be all for this video. Watch the earnings, watch the data that comes out tomorrow, economic data for Thursday, for Friday. That's going to be the main drivers heading into this weekend and starting off next week. And then on the 2nd, November 2nd, which that is going to be next Wednesday, that's when you're going to have the Fed meeting, and that's when things could get pretty damn crazy. If the Fed does pivot, that's going to be very bullish. If the Fed does not pivot, that is going to be massively not bullish. So thank you guys for watching. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.